All right, so today we're diving into financial management.
Yeah.
And I know what you might be thinking.
Uh-huh.
Spreadsheets, numbers,
Yeah.
maybe even a little bit of a snooze fest.
You think so, right?
But trust me, this is way more interesting
Oh, yeah.
than you might think.
For sure.
We're going to be looking at this YouTube video
Okay.
from Education Leaves
Right.
called What is Financial Management? Types, Functions, Objectives. And it's packed with insights that can change how you think about money.
Okay. Oh, yeah.
Whether it's for your own business or your investments or just understanding how this whole world works, the financial world.
Absolutely.
What really struck me about this video is how it defines financial management.
Yeah.
It uses this word diplomatic,
Right.
which you wouldn't normally associate with finance.
Yeah, not at all.
Right? Diplomatic.
Yeah.
Usually I think of like negotiating treaties and stuff.
Yeah.
What's the connection?
Well, think about the decisions a financial manager has to make. They're constantly balancing competing priorities.
Oh, I see.
Keep the business profitable, sure,
Uh-huh.
but also keep the shareholders happy.
Right.
Manage risk
Mm-hmm.
and operate ethically.
Yeah.
That's a lot of balls to juggle.
So it's like they're mediating between these stakeholders, each with their own demands and expectations.
Exactly.
It's kind of like a financial peace treaty,
That's a good way to put it.
making sure everyone gets a fair deal.
Yeah, I like that.
So it's not just about crunching numbers.
Yeah.
It's about understanding those human factors,
Right.
the motivations and the potential conflicts.
Absolutely.
Now, speaking of goals, the video lays out 6 key objectives of financial management.
Okay.
We've got maximizing profits, ensuring good returns for shareholders, making sure there's enough cash on hand,
Right.
using funds wisely,
Yes.
making smart investments,
Yeah.
and building a solid financial foundation.
That's a lot.
It's a lot to keep track of. Have you seen companies struggle to balance these objectives?
Oh, all the time.
Where does it get tricky?
Well, I think one common pitfall is focusing too much on short-term profits
Okay,
at the expense of long-term growth.
I see.
So, like, imagine a company cutting back on research and development
Uh-huh.
to boost their current earnings.
Okay.
Sure, their profits might look good in the short term,
Yeah.
but they risk falling behind their competitors in the long run.
Right. So it's like being a gardener.
Exactly.
You can't just focus on harvesting the fruit you have now.
Yeah.
You also need to nurture the soil and plant seeds for the future.
That's a great analogy.
And that's where the objective of optimum funds utilization comes into play.
Right.
It's not just about spending less, it's about spending smart,
Exactly.
making every dollar count.
Yes.
I'm starting to see how these objectives are all interconnected.
Yeah.
You can't just pick and choose.
Right?
You need to consider them holistically.
Absolutely.
And what about the financial manager themselves? What do they actually do all day?
Well, picture this.
Okay,
You're the captain of a ship navigating through uncharted waters.
I like it.
You're constantly analyzing the maps,
Okay.
which would be financial statements,
Okay.
adjusting the sails,
Right.
which are your investment strategies, keeping a watchful eye on the horizon for, like, market trends.
Right.
That's the essence of a financial manager's job.
So dynamic,
Very dynamic.
challenging.
Yes.
I'm guessing it's not all smooth sailing, though.
Of course not.
What are some of the toughest decisions a financial manager has to face?
I think one of the most challenging and frankly fascinating aspects is managing risk.
Okay.
It's like walking a tightrope.
Uh-huh.
You need to balance the potential for high returns with the possibility of significant losses. There's this thing called the debt-to-equity ratio,
Okay.
which measures how much debt a company uses to finance its operations.
Right.
A high ratio can mean big rewards,
Okay.
but it also means higher risk, like taking on a bigger loan to potentially grow your business faster.
Uh-huh.
But if things go south, that debt can quickly become a burden.
So it's not just about being a daredevil.
Right.
It's about calculating those risks and rewards.
Exactly.
But hold on, isn't some debt good for a company?
Yeah.
Doesn't it give them leverage to grow faster?
Yeah, you're right. Some debt can be beneficial.
Okay.
It allows companies to invest in opportunities they wouldn't otherwise be able to afford.
How do you find that balance?
The key is finding that sweet spot,
Okay.
a level of debt that fuels growth without putting the company in a precarious position. It's all about understanding the company's risk appetite
Right.
and carefully assessing the potential consequences of each financial decision.
That makes sense.
Yeah,
It's about making smart choices that align with the company's overall goals and risk tolerance.
absolutely.
Now, the video also mentions different types of financial management:
Okay.
capital budgeting,
Yes.
capital structure,
Uh-huh.
and working capital management.
Those are the big three.
Yeah,
Yeah.
it seems like these are the key areas where a financial manager focuses their efforts.
They are?
Let's start by unpacking what capital structure actually means.
Okay.
It's essentially the mix of debt and equity a company uses to finance its operations.
Right.
Think of it as the foundation of their financial house.
I like that.
Do they primarily rely on loans,
Mm-hmm.
debt,
Yeah.
or investments from shareholders,
Which is equity.
equity, or a combination of both?
Most likely a combination.
Each has its own pros and cons.
Exactly.
And finding the right balance is crucial
Yeah.
for the company's long-term stability and growth.
Absolutely.
So if debt is like taking out a mortgage on your house,
Okay.
equity is like having your friends and family chip in to help you buy it,
Uh-huh.
and the capital structure is deciding how much of each you're comfortable with.
Yeah, that's a great analogy.
And just like with buying a house,
Yeah.
there's no one-size-fits-all answer.
Of course not.
The optimal capital structure depends on factors like the company's industry,
Yeah.
its growth prospects,
Right.
the interest rates they can secure, and their overall risk tolerance.
Mm-hmm.
It's a complex puzzle,
Yeah.
but understanding these pieces is key
It is.
to making informed financial decisions.
Absolutely.
I'm starting to realize that financial management is way more than just numbers on a spreadsheet.
It is.
It's about strategy,
Mm-hmm.
understanding risk,
Yes.
and making choices that shape the future of the company.
Absolutely.
You got it.
Yeah.
And it's this strategic element that makes it so fascinating.
It is.
It's about thinking several steps ahead,
Right.
anticipating challenges, and making decisions that not only solve immediate problems, but also position the company for long-term success.
Mm-hmm.
All right, well, this is already giving me a lot to think about.
Yeah.
Let's take a closer look at these different types of financial management,
Okay.
starting with capital budgeting.
Right.
What's that all about?
Capital budgeting is all about making those big investment decisions.
Oh.
Think of it as deciding how to spend those precious dollars on projects that will hopefully generate future profits.
Oh,
Do you invest in new equipment,
mm-hmm.
expand into a new market,
Mm-hmm.
or develop a groundbreaking new product?
Right.
These are the types of questions that capital budgeting grapples with.
So it's like choosing how to plant those seeds for future growth that we talked about earlier.
Absolutely.
And just like a gardener carefully selects the best seeds
Yeah.
and nurtures them with the right resources,
Uh-huh.
a financial manager uses capital budgeting techniques to identify and evaluate potential investments,
Right.
ensuring they align with the company's overall strategy and have the potential to yield a healthy return.
Yeah.
And this is where those financial detective skills come in handy, right?
Yeah, absolutely.
Analyzing the numbers,
Yeah.
assessing the risks,
Mhm.
and trying to predict which investments will bear the most fruit.
That's a good way to put it.
And that brings us to the third type of financial management,
Okay.
working capital management.
All right. Keeping the engine running smoothly.
More like managing the company's circulatory system,
Okay.
ensuring a healthy flow of funds to keep all the vital organs functioning.
I see.
It's about making sure the company has enough cash on hand to pay its bills, manage inventory,
Right.
and handle those day-to-day financial obligations.
So while capital budgeting is focused on those big long-term investments,
Yeah.
working capital management is about the everyday financial health of the company.
You got it.
Think of it as the difference between planning a cross-country road trip
Okay.
and making sure you have enough gas in the tank to get to the next gas station.
I love that analogy.
Both are important for a successful journey.
Absolutely.
It really highlights the importance of both long-term vision and short-term efficiency.
Yeah.
Exactly. And that's the beauty of financial management.
Right.
It's this intricate web of interconnected decisions, strategies.
Yeah. And considerations.
Yeah,
And while it can seem daunting at first,
it can be.
understanding the core principles of the different types of financial management can empower you to make smarter decisions,
Absolutely.
whether it's for your own business, your investments, or just your personal finances.
Yeah.
This is all making a lot more sense now.
Good.
We've covered the definition of financial management.
Mm-hmm.
It's key objective, the role of a financial manager,
Right.
and even the different types of financial management.
Yeah.
It's like we've assembled this toolkit
I like that.
ready to tackle any financial challenge that comes our way.
Exactly. And the key takeaway here is that financial management is much more than just numbers and spreadsheets.
Right.
It's about making smart choices, managing risk, and creating value for all stakeholders.
Right.
It's about shaping the future of a company
Yeah.
and ensuring its long-term success.
And that's what makes it so fascinating.
Yeah.
It's not just about maximizing profits. It's about making decisions that have a positive impact
Right.
on the company,
Yeah.
its employees, its investors, and even the wider community. It's about using financial tools and strategies
Yeah.
to create a more sustainable and prosperous future
Right.
for everyone involved.
Exactly.
Well said.
Thank you.
And I think that's a perfect segue into our final thoughts.
Okay. So financial management often gets painted as this cold, calculating field,
Yeah.
all about maximizing profits no matter what.
Right.
But the truth is it's deeply intertwined with human behavior and motivations.
Okay. I never really thought about it that way.
Yeah.
How do you see that human element playing out in financial decisions?
Well, let's take the example of investing.
Yeah.
It's not just about crunching numbers and picking the stock with the highest potential return.
Right.
It's about understanding why people invest in the first place.
Okay.
Their hopes, their fears, their dreams for the future. Some investors prioritize security and stability.
Yeah.
Others are driven by the thrill of high-risk ventures.
Okay.
A savvy financial manager recognizes these diverse motivations
Right.
and tailors their approach accordingly.
So it's like being a financial therapist,
Kind of.
understanding the psychology behind the numbers,
You could say that?
and that psychological dimension extends beyond individual investors.
Oh, yeah.
Think about a company deciding whether to invest in a new factory. On the surface, it's a financial decision.
Right.
Will it generate a sufficient return on investment?
Right.
But beneath the surface, there are human considerations,
Yeah.
the potential impact on jobs, the local community, even the environmental footprint.
Right.
A truly effective financial manager doesn't just look at the bottom line.
No.
They consider the broader social and ethical implications of their decisions.
Absolutely.
That makes a lot of sense.
Yeah.
It's about recognizing that financial decisions have ripple effects,
They do.
impacting not just the company's balance sheet.
And also the lives of real people.
Yeah, and that's why financial management can be such a powerful force for good. When done thoughtfully and ethically,
Right.
it can create opportunities,
Uh-huh.
foster innovation, and contribute to a more sustainable and equitable world.
I love that perspective.
Thanks.
It really elevates the field beyond just dollars and cents.
Sure.
Okay, so we've talked about these different types of financial management.
Right.
Capital budgeting, capital structure,
Yes.
working capital management.
Yeah.
But how do these concepts actually play out in the real world?
Okay.
Can you give us an example of a tough financial decision a manager might face?
Sure. Imagine you're the financial manager of a growing tech startup.
Okay.
You've got this incredible new product that's gaining traction in the market, but to scale up production and meet demand, you need a significant cash infusion.
Okay, let me guess.
Go ahead.
Take on more debt,
Yeah.
issue more stock, maybe try to attract a strategic investor.
Yeah, you nailed it. Those are the classic choices,
Okay.
each with its own set of trade-offs.
Right.
Debt might be the quickest and easiest route, but it comes with interest payments and can put a strain on your cash flow.
Okay.
Issuing more stock dilutes the ownership of the founders and existing investors, and a strategic investor brings valuable expertise and connections,
Right.
but they'll want to say in how the company is run.
Yeah, it's a high-stakes poker game.
It is.
Weighing those potential benefits against the risks and making a bet on the future.
Absolutely.
Wow, that sounds incredibly stressful.
It can be.
I can see why you compared it to captaining a ship through uncharted waters earlier.
Yeah.
There's no guaranteed right answer.
Nope.
It's all about making the best decision with the information you have at the time.
That's all you can do.
Exactly. And that's where those financial detective skills come in handy.
They do.
You're analyzing market trends,
Yeah.
assessing the competitive landscape, forecasting future cash flows, and trying to make an educated guess about which path will lead to the most favorable outcome.
Right?
There's always an element of uncertainty,
Always.
and that's what makes financial management both challenging and exhilarating.
Absolutely.
It's like solving a complex puzzle.
Yeah.
with real-world consequences.
It is.
Okay, so let's break down these options a bit further.
Okay.
We've talked about debt-to-equity ratio before.
Yes.
Can you remind us how that plays into this scenario?
Sure. The debt-to-equity ratio is a key metric that investors and lenders look at to assess a company's financial health and risk profile.
Okay.
It's a simple calculation.
Uh-huh.
Total debt divided by shareholder equity.
Right.
A high ratio indicates that the company is relying heavily on borrowed money to finance its operations, which can be seen as risky.
So going back to our tech startup example,
Okay.
if they take on a lot of debt to fund their expansion, that could raise red flags for potential investors down the line.
Potentially, yes. It depends on how that debt is managed. And whether the company can generate sufficient cash flow to cover those interest payments.
Right.
Remember, debt acts as a lever.
Okay.
It can amplify returns if things go well,
Right.
but it can also magnify losses if things go south.
It's like using a credit card.
Exactly.
If you pay it off on time and manage it responsibly, it can be a useful tool. But if you rack up a lot of debt and can't keep up with the payments, you can quickly find yourself in trouble.
That's a great analogy.
And it highlights why understanding these financial concepts is so important.
Yeah.
Not just for businesses, but also for individuals managing their own finances.
For sure.
The principles are the same.
Yeah.
Whether you're running a multinational corporation or figuring out how to budget for your monthly expenses.
Exactly.
This is making me think about my own financial decisions in a whole new light.
Good.
So debt is one piece of the puzzle.
Okay.
What about issuing more stock?
All right.
How does that work?
Yeah. Well, issuing stock is essentially selling a piece of ownership in the company to raise capital.
Okay.
It can be a great way to fuel growth without taking on additional debt, but it comes at a cost.
What's that?
When a company issues new shares, it dilutes the ownership stake of existing shareholders.
So if I own 10% of a company and they issue a bunch of new shares, my 10% suddenly becomes worth less because there are more pieces of the pie to go around.
Exactly.
And that's why existing shareholders, especially founders, are often hesitant to dilute their ownership too much.
Right.
It can also impact the company's stock price, as the increased supply of shares can put downward pressure on the value of each share.
Yeah.
It's like adding more water to a pitcher of lemonade.
Okay.
The taste might be the same, but each glass is a little less potent.
That's a good way to put it.
So issuing stock can be a powerful tool.
Yeah.
But it's not a decision to be taken lightly.
No.
It requires careful consideration of the potential impact on existing shareholders and the company's overall valuation.
Absolutely.
All right, so we've got debt and equity. What about that third option?
All right.
Attracting a strategic investor.
All right.
What makes that different from just any other investor?
A strategic investor is more than just someone looking for a financial return.
Okay.
They're typically a company or individual with expertise, resources, or connections that can help the startup grow and succeed.
Oh, I see.
Think of it as a partnership rather than just a financial transaction.
So it's like finding a mentor who not only invests in your business, but also brings valuable knowledge and guidance to the table.
Exactly.
A strategic investor might have a deep understanding of the target market, a strong network of potential customers, or even experience navigating regulatory hurdles. It's like gaining access to a whole team of advisors and supporters who are invested in your success.
That's a good way to think about it.
That sounds like a huge advantage.
It can be.
But I imagine it also comes with some strings attached.
Of course.
They're not just going to hand over a blank check without expecting something in return, right?
Right. They typically want a seat at the table.
Okay.
Meaning they'll want some level of control over how the company is run.
Okay.
This can involve board seats, voting rights, or even veto power over certain decisions.
So it's like inviting a powerful ally into your castle.
Yeah.
But you're also giving them a say in how the kingdom is ruled.
That's a great analogy.
And it highlights the importance of carefully vetting potential strategic investors and making sure their vision aligns with the company's long-term goals and values.
Absolutely.
This is all starting to feel like a high-stakes chess game.
It is.
Weighing the pros and cons of each move. Anticipating the opponent's strategy and trying to stay several steps ahead.
You got it.
And that's what makes financial management so fascinating and challenging.
It is.
It's a dynamic field that requires constant learning, adaptation, and a healthy dose of strategic thinking.
For sure.
It's definitely a lot more than just balancing a checkbook.
It is.
Speaking of which, I'm curious about the role of financial forecasting in all of this.
Okay.
How do financial managers try to predict the future
Uh-huh.
and make decisions based on those predictions?
Financial forecasting is like peering into a crystal ball.
Okay.
But instead of relying on magic, we use data analysis and a healthy dose of intuition.
Okay.
It's about projecting future financial performance based on historical trends, current market conditions, and the company's strategic plans.
Wait.
Think of it as creating a roadmap for the future.
Okay.
Identifying potential obstacles and making adjustments along the way.
So it's not about predicting the future with 100% certainty,
No, of course not.
but rather creating a range of possible outcomes
Yeah.
and developing strategies to navigate those different scenarios.
Yes.
And that's where tools like sensitivity analysis come in handy.
They do.
We can tweak different variables in our financial models
Right.
to see how those changes impact the overall projections. It's like running simulations to see how the company might perform under different market conditions,
Uh-huh.
or if certain assumptions prove to be inaccurate.
That's right.
It's like a financial choose-your-own-adventure,
I like that.
exploring different paths and preparing for the unexpected twists and turns along the way.
Yeah, that's a great analogy.
And that ability to adapt and adjust is crucial in today's rapidly changing business environment.
It is.
This conversation is really opening my eyes to the complexity and dynamism of financial management.
Good.
It's so much more than just crunching numbers.
Yeah.
It's about strategic thinking, risk assessment, and understanding the human factors that drive financial decisions.
Absolutely.
Well said.
Thank you.
And I think that's a perfect point to transition to our final thoughts. We've spent this deep dive really unpacking the complexities of financial management.
Yeah,
It's clearly a lot more than just number crunching.
it is.
But I think what's really resonating with me is this idea of the human element,
Right.
how financial decisions are ultimately driven by human needs, motivations, and even emotions.
It's interesting, isn't it?
Yeah.
We often think of finance as this cold, objective field.
Yeah.
But at its core, it's all about people,
Right.
their aspirations, their anxieties, their dreams for the future. These all factor into financial decisions,
Yeah.
whether we realize it or not.
It's like that saying, money is just a tool.
Right.
It's how we use that tool, the choices we make,
Uh-huh.
that reveals our values and priorities.
Absolutely.
And that's why financial literacy is so important,
Yeah.
not just for those in the finance world, but for everyone.
For sure.
The more we understand the principles of financial management,
Right.
the better equipped we are to make decisions
Yeah.
that align with our values and goals. Whether it's saving for retirement, investing in our education,
Right.
or even just managing our day-to-day expenses.
Yeah, it's about taking control of our financial lives.
Right.
And making choices that empower us.
Right.
Rather than feeling like we're at the mercy of forces beyond our control.
That sense of empowerment can be incredibly liberating.
It can.
It allows us to pursue our passions, support our families, and contribute to the causes we care about. Financial management, at its best, isn't just about maximizing wealth.
No.
It's about creating a life of meaning and purpose.
Well said.
It's a powerful message to end on.
Thanks.
I feel like this deep dive has not only demystified financial management,
Uh-huh.
but also inspired me to think more critically about my own financial choices
Yeah.
and how they align with my values.
Good.
And that's what we hope to achieve with these deep dives.
It is.
To spark curiosity,
Right.
challenge assumptions,
Uh-huh.
and empower you to explore these topics further on your own.
Yeah.
Well, folks, there you have it.
That's it.
A deep dive into the world of financial management.
We did it.
We hope this conversation has provided you with some valuable insights and maybe even a few aha moments.
Yeah.
And remember, this is just the beginning of your journey. The world of finance is constantly evolving.
Right.
So stay curious, keep learning,
Yeah.
and don't be afraid to ask questions.
Absolutely.
Who knows? You might even discover a passion for financial management yourself.
You might.
On that note, we'll wrap things up for today.
Sounds good.
Thanks for joining us.